Hi, everyone. Thank you so much for joining. It's been a big week for financial markets, right? We've seen some big events, more Trump tariff talk, and of course those Nvidia results that came out last night. I just want to throw a few numbers at you, and we will break it down and hopefully make it very easy for you to understand. Now, we overall had a really decent report. I am going to just check these numbers here for you, but Q4 revenue was 39.3 billion, so that was higher than the 38 billion expected. We had revenue expectations of 42.8 billion for this quarter, so a massive jump in expectations. Q2 expectations 47 billion is what analysts now expect. So some big expectations there. Again, these big monstrous numbers like we've come to expect from Nvidia. Net income, which is a measure of profit, that rose to 22.9 billion last quarter and is expected to come in at 31.02 billion for Q1. So again, very profitable company. There is no doubt about that. We saw some really strong demand for their latest, most advanced chips, the Blackwell chips, and a strong pipeline of demand for Blackwell chips. So there's not too much to complain about. Nvidia's stock price is up about 1% in the pre-market. It was up 3.6% on Wednesday before those results, up 5% in the past month and down about 3.5% year to date. However, the reaction to the results, I was following them live last night. It was a real whipsaw market. We saw the stock surge 4% at one point, then it fell 2%, and then it settled around just under 1% and is expected to open up about 1%, which is lower than the average move for earnings days. So why is this less interesting? Well, I'm going to try and share my screen now. Just Great. Sorry about that, everyone. I think I just got knocked off, but I'm back now. I'm going to just try and share my screen. So just bear with me one moment. You'll actually be able to see what I'm talking about. Oh, sorry, guys. I'm not sure it's able to allow me to share my screen for now, but I will tell you, we are up 1% for Nvidia so far. So the whole problem for Nvidia? Well, it's a couple of things, and it's not just Nvidia's issues, right? So we've also got the issue with we've also got a bigger issue actually with overall Magnificent Seven. The Magnificent Seven has essentially been dead wood in your portfolio if you've had it in there since November. It reached a high in November. Since then, it's actually fallen. It's now its lowest level since the start of December. So we've really seen the Magnificent Seven hasn't really moved anywhere. Now we've spoken about tech being this massive theme that was really buoying US stocks. Well, that's really reversed as we moved into 2025. So even though Nvidia is doing these amazing and reporting these amazing results, we're not seeing that in the share price, and that is because people just don't seem to be willing to pay for that valuation, for those valuations anymore. We know that stocks, some tech stocks, were very highly valued, such as Tesla, and what we're seeing is that markets are just saying no to that. We've also seen a real shift in leadership in the Magnificent Seven. Nvidia had been powering ahead. They're now one of the weaker performers, and instead we're seeing Meta lead the charge. But if Meta comes under pressure, that's going to be a problem for the Magnificent Seven generally. And Meta is a company that's just not big enough right now to push Nvidia forward. Now, I think there's another reason that we're seeing Nvidia and the Magnificent Seven not do as well as expected this year, and it's all to do with dollar yen. Now, I'd love to show you, so I'm going to try and share my screen again, and if not, then I can always talk you through it, and I'm going to put a note out about this afterwards, so you will see it anyway. That should be, you should hopefully be able to see this soon. Sadly, not possible, but oh, here we go. It looks like it's coming up now. bear with me, everyone. And I'm sorry for the technical difficulties, but this is super interesting. It's really worth watching watching this. So when this buffers and it comes up, I'm basically showing you Magnificent Seven and dollar yen. Dollar yen and Magnificent Seven both peaked together in around and about the start of peaked around the start of December. Since then, they've both fallen together. Now, why is that the case? This is a Forex market, they're a stock market. Why would they move together? It is the reason why is because of a few things. It's because of capital flows. Now, don't let that freak you out. But essentially, as the magnificent, oh, here we go, brilliant, we've got it. This is amazing. So here we go. We've got our chart, my screen. So you can see this. So the white line is the Magnificent Seven. The orange line there is dollar yen. So as you can see, this chart hasn't been normalized. It's how they've been moving over the past year. They're both falling together, right? You can see there's a really strong correlation there. Now, we think that there's something to do with that bottom in the yen. So when the yen started rising, back in December, when the Bank of Japan started hiking interest rates, that's had an impact on US tech stocks. Now, what that says to us is that flow of capital from east to west has really slowed down as the dollar yen has fallen or as the yen has strengthened, because that orange line falling is a sign of dollar weakness and yen strength. So those two things are correlated. So what it means essentially is that we've seen less Asian investors potentially interested in buying tech. Instead, they're kind of buying at home. Now, we can see why. We can also have some pretty good evidence of that as well. Hopefully you can see this. I know it's taking a bit of time. There we go. This chart's really interesting. The white line is the Golden Dragon Index. That is the index of, that is the US listed Chinese tech firms, and the orange line is just the NASDAQ 100, so the biggest tech firms on the NASDAQ. As you can see, moving in complete different directions, this chart has been normalized to the start of this year to show that the Golden Dragon Index in about the third week of January started massively outperforming the NASDAQ. Now, what happened then? That was DeepSeek. So DeepSeek, that Chinese AI company, came out and they said, hey, we've got great AI models as well. It really threatened the dominance of the US, and that's had a massive impact on investor sentiment. Now, what the Nvidia results show us is that it's not had a big impact on Nvidia results. So they're still able to rake in cash, literally rake it in. They've got such a big cash pile that they're almost trading like a defensive stock right now. But it also shows that investors in tech are more interested now in what's going on in China, and they're willing to put their money to it. Now, I want to show you another chart. Just bear with me, guys. And this just again exemplifies that same theme. This is the Hang Seng against the NASDAQ index. So the white line is the Hang Seng index and the orange line is the NASDAQ 100 index. So as you can see, the Hang Seng index is the Hong Kong index. So that measures sentiment towards Chinese shares essentially, because it's very easy to access and a bit more easier to access than the CSI 300, which is the Shanghai index. And as you can see, it's massively outperformed the NASDAQ in the past month and a bit. We know that it's made huge gains. This is just a theme that's evolving at the moment. People are moving money out of the US and they are putting it elsewhere. Now, it's not just the Hang Seng. They're also really interested in Europe. That's for a different reason altogether. And Europe has been, even though it's lower today, it's been very resilient in terms of Trump's tariff threats. We have to see if it's going to continue to do that because of tariffs that are going to hit the EU soon, probably in April. So we need to see if that's going to have a longer term impact. But essentially what we've got here is dollar yen is telling us a lot about sentiment towards US tech stocks, including Nvidia. And that's why we think Nvidia hasn't done as well as we would have thought that it would have, especially after that monster earnings report. Now, as I said, it's up about 1%. Well, the average move 24 hours after a earnings report is about 4%. So it's quite a muted reaction. But as I said, there's so many other things that are rallying really, really strongly, like the Hang Seng, like the Golden Dragon Index in the NASDAQ, and that's kind of taking a bit of preference. So whilst we think that the Magnificent Seven, let me just go back to that chart here, which is the dollar. So sorry, it's the dollar yen and the Magnificent Seven. Whilst we think that those whilst we think that those stocks will do very well, are under pressure, we do think that the Magnificent Seven has come under quite a lot of pressure already. So it'll be interesting to see how it can move forward. What we thought was really interesting last night in the call with Nvidia, they were able to bat off the concerns about DeepSeek, and basically they really had been in good training. They knew their stuff, the Nvidia executives, because rather than sound concerned or worried about the threat from DeepSeek, they turned around and said that would be good for business, because firstly, DeepSeek is only one model. It's only doing like the same thing as ChatGPT, so it's a large language model. What they said is that Nvidia's chips, they're used throughout the whole of the AI spectrum. They also said that actually having, if DeepSeek, they have an open source model, so they allow anyone to come in and replicate what they do, that will just spur demand even more. One weak point of, there were a couple of pockets of weakness in Nvidia results. Now I don't think that's having the biggest impact on the stock price today, but if it starts to gain attention in the coming weeks, you heard it here first. The first one is some gross margin pressure. So gross margins fell to 73%, down from 74%, I believe. And we also had expectations that in Q1 it will fall even further to 71%. Now, that just means essentially they're having to spend more to produce the same amount. So their gross margins are lower. And this is very typical in any business. When they're producing really high-tech, advanced chips, they're having to spend a bit more. They can't pass all of those costs on to the consumer, so the costs are quite high. They've said this is a temporary blip. We think that could be the case as well, largely because going forward, Blackwell may be the peak for advancement for the AI chips, so they may not need to spend as much when they develop further chips. So that's something to note. The other thing was inventories. They saw an increase in inventories in Q4 relative to Q3 by about $3 billion. Now, when you hear about higher inventories for chip stocks, that normally causes the market to worry. Well, the market hasn't worried, even though they haven't had a euphoric reaction to the Nvidia results. They haven't sold them off either. So it suggests to me that that the higher inventory is a sign that shipments of probably Blackwell chips will be very strong for the first quarter. So it's actually good news about the first quarter results. So a very muted reaction compared to average for Nvidia. But there are lots of reasons for that. As I said, it's that dollar-yen Magnificent Seven relationship that I think was really interesting at the moment. So Forex really coming to the fore as well. Also, a lot of flows into China and into Asian indices rather than into the US tech sector. So that's all keeping Nvidia's market reaction to these results very, very much contained. But thank you so much for joining today. I'm going to leave you all now, and we will see you soon. Please join us for our next Market Live, which is after the NFP results next week. Thank you.